What if I told you there is a way to make money even while you sleep? No crypto, no dropshipping, no risky options trading, just solid, boring money paid to you every month for just owning something. In 1942, a young boy bought his first stock when he was just 11-year old. Fast forward to today, and this man earns over $2 million not in a year, not in a month, not in a week, every single day for just owning one company stock, which is Coca-Cola. And that man is none other than Warren Buffett. Sounds unreal, right? But it's not magic. That's called dividend investing, the quiet yet powerful force behind some of the greatest fortunes in the world. Now, the question can be, what are dividends? A dividend is simple. When you own a piece of a company, let's say Coca-Cola, and they make billions of dollars in profit, then they like to share some of its profit to its shareholders. And that's exactly called dividend. So if Coca-Cola pays you $1.84 per share, and if you own 100 such shares, then you will get $184 per year for doing nothing. Multiply that with the right companies and you will have some serious cash flow. Now the question can be, do you really want dividend alone, or you also want to see growth in the company? Now that's what separates wannabes from winners. You want company that do both the things. Number one, pay you a dividend, and number two, grow in value over time. For comparison, let's assume company A, which is giving you good amount of dividend every year, but from last 10 years haven't grown in value. On the other side, you have company B, whose value have tripled over time, but is giving you 1/4 of the dividend that you are getting from company A. Question to you is, which company you will select for dividend investing? And this is exactly where people mess up. A 9% dividend sounds great until the stock crashes. So I will show you how to find the sweet spot. Now I am going to give you a checklist to find a reliable dividend stock. And this will also give you confidence that you have done your due diligence by analyzing the company and understanding the finances, if this company is worth investing or not. Number one, dividend growth. Have this company increased dividend over the last 5 years or not? Number two, payout ratio. Is this company paying less than 70% of their income or not? So the higher the payout is, the higher risk it is. So it's better to invest in companies which have lower payout rate, because in long term, the company will appreciate in value and the stock will appreciate, and overall your money will appreciate. So you should always look for companies which doesn't have crazy number of payout ratio like 90% or 85%. Number three, earning growth. If the earning or profit of the company is growing over time or not. This is one of the main component of our analysis. And number four, price growth. Have the stock increased in value or not? This is one of the most important aspect. You don't want to invest in a stagnant company. You want to always invest in company which is growing over time. So these are the 4 points that you should check and do your due diligence for your research. And that's how you decide where to invest and where not to invest. And I can give you example of both categories. Number one, Microsoft, which has low yield but has grown a lot over time. On the other side, AT&T, which is remaining flat from so many years. So where would you like to invest? Your money will actually grow more where there is both component, growth as well as dividend. And your dividend part is not the only factor by which you can grow your investment over time, but rather the growth of the company as well. And that's exactly what Microsoft is winning in this case. So in this example, you can see on one side you have Microsoft, which has grown tremendously over time. On the other side, you have AT&T, which is almost flat over time. So where would you like to invest your money? Even though AT&T is giving you higher dividend but is remaining flat, and as a result your money is not growing, but you are getting a dividend payout. At the same time, Microsoft tremendously grows and have dividend component as well. So your money is not just growing, but also you are getting rewarded to own the Microsoft stocks. So which one you will choose? Let me know in the comments below. Now that we know about factors by which we decide if we want to invest in a particular stock or company or not, now the question can be, what is the plan? How we can grow our wealth over time by dividend investing? So let me frame you a $100 per month dividend plan. To earn $100 per month, that's $1,200 a year. And depending on the yield, this is what you need to invest. If the yield is 2%, you need to invest $60,000. If the yield is 4%, you need to invest $30,000. If the yield is 6%, you need to invest $20,000. And if the yield is 8%, you need to just invest $15,000. But what if you don't have $15,000 right now? That's where DRIP plus consistency comes in picture. DRIP stands for Dividend Reinvestment Plan. So whatever dividend you are getting from your money invested, you are reinvesting in the stock itself. And that's where your money and wealth grows over time. So don't worry if you don't have $15,000 or certain number of dollars, but you still want to invest, then go slow, but keep doing consistently and grow your wealth over time through the DRIP plus consistency method. So the plan is start small even if you are broke. So the first thing you need to do is open an investment account. Either open with Fidelity, Vanguard, or M1 Finance. These all are great reliable companies where you can grow your wealth over time and you don't need to worry about your platform because these are really big companies which has been trusted over time. Number 2, buy fractional shares. Even with $25, you can invest in a fraction of Coca-Cola or Apple and you can start investing. Number 3, turn on your DRIP, which is Dividend Reinvestment Plan. So the amount of dividend that you will receive, you are reinvesting them into the stocks that you can purchase again, and in that way your wealth will grow over time. Step 4, set monthly goals. So let's say this month you are going to invest $25. Next month plan for $50 and maybe next year plan for $100 per month. And in that way you can grow over time. Don't need to worry if you have other financial responsibilities. Dividend investment is a journey. Start this journey with your first step and you will get there sooner or later. And this is exactly how most of the self-made billionaires have started investing. They started broke but have made billions of dollars over time. So you need to believe in this fact that it is a journey and it's going to be a long journey but very fruitful journey if you stay consistent about your goals. In other words, momentum is the key and you are planting a tree that will make you money. So you are basically watering your money plant by investing over time, either monthly or weekly, whatever you prefer. But this journey is going to take a lot of time, but will give you a lot of fruit if you stay consistent and focused. Now that I have discussed about dividends and plan how you can get started, your question can be naturally, which stocks or ETFs that I can invest in which can give me a good payout for dividends. So here are top 7 stocks that I'm going to discuss with you. But again, I gave you 4 different parameters by which you can analyze the stock and decide for yourself which one is best for you. I am going to discuss with you my analysis, what my analysis says and why, and based on that you can pick and choose, but at the same time your due diligence is absolutely needed. Now let's talk about the individual dividend paying stocks that are worth watching in 2025. These are not meme stocks or high play. These are companies with proven track record, with real products, with real profits, and a history of paying their investors like you consistently. So my number 1 pick is Microsoft. You might look at Microsoft dividend yield, which is 0.75%, and think, well, that's tiny. But don't sleep on it. Microsoft has been raising its dividend over a decade, and more importantly, the stock have 10x'd itself in last 12 years. Not only that, they have dominated the software industry. They own LinkedIn. They are leading in artificial intelligence with OpenAI and Azure. Microsoft is exactly what I call the dividend growth engine. The payout today is small, but it could grow massively over time if you hold and reinvest in this stock. Number 2, JP Morgan Chase with a yield of 2.88%. When the world panics, Jamie Dimon stay calm. JP Morgan Chase is not just the biggest bank in Americas, but it is one of the most respected globally. Through recession, rate hikes, pandemic, and you name it, this company kept paying its dividend, which boosts your long-term returns. So if you believe that banking is not going anywhere, then this is one of the reliable stock that you can invest in for long-term dividend growth. Number 3, Coca-Cola with 3.1% yield. Let me put in this way, Warren Buffett makes more in dividends coming from Coca-Cola than most of the individual Americans in their entire lifetime. He started buying in the 80s and haven't sold even one share till now. Coca-Cola pays its dividends in every single quarter and have raised over the last 60 years in a row. This is what we call it dividend king. And even in inflation, recession or boom, people still drink Coca-Cola. Number 4th on the list is Verizon with a dividend yield of 6.8%. Verizon is one of those classic dividend giants. And the stock is not rising as you expect, but dividend is 6.8%. That's huge. And not only that, it's a stable business. People will always need phone services. This is a stock for income-focused investors. If you want monthly cash flow, then Verizon can be a great option. Just make sure that you are okay with lower capital appreciation since the company is giving a lot of dividends. Number 5 on the list is Realty Income with a dividend yield of 5.7%. Realty Income is a real estate investment trust, a REIT that owns commercial properties across the United States. Think of Walgreens, dollar stores, 7-Eleven, places where people go every day. They have branded themselves as monthly dividend company and have paid over 600 consecutive monthly dividends. That's 50 plus years. If you want passive income every month, this stock is a gem. Now, 6th on my list is Main Street Capital with a dividend yield of 6.9%. Main Street Capital is a business development company, which means they lend money to small and mid-sized businesses. And as a return, they receive payouts as interest that they passes on to the investors like you and me. This company also pays monthly and have been known for being well managed. It is not as mainstream as Microsoft, but the income is very real and consistent. And last on the list, number 7, Altria with a dividend yield of 9.3%. Now, Altria is a controversial pick, and I am not personally investing, but this is something that I wanted to share because if people are interested, they can invest in this company. And they own Marlboro. I know smoking is bad and is declining, fortunately, but still this company owns a lot of power in this sphere to alter the pricing. They own Marlboro and have very diversified income stream. They not just own nicotine patches, but the company have massive pricing power. And they are diversified into areas like nicotine pouches and cannabis in Canada, which is a huge market. Their dividend yield is sky high, over 9%. The stock doesn't move much, so you're buying mostly for income, not growth. And if you are okay with that, then this can be a great cash flow option for you. Now, moving to the next section, I also want to give you 3 ETFs that also have good dividend income that you can invest in or consider to invest in. But again, I would caution you to do your due diligence. Number 1 on my list is SCHD, Schwab US Diversity Equity ETF with a yield of 3.8 to 4%. SCHD is my personal favorite. Why? Because it combines with high yield with solid pricing growth. It holds names like Coca-Cola, PepsiCo, Home Depot, and Broadcom. They're not just dividend players, they are also capital gainers. The expense ratio is super low, which is 0.06%, and it has grown more than S&P 500 over the last 10 years if reinvesting dividends. If I could buy one dividend ETF, this is it. Next on the list is VIG, which is Vanguard Dividend Appreciation ETF with a yield of 1.9%. This ETF is not about high yield. It is about consistent growth. VIG only include companies which has raised dividends every single year over the last 10 years. It's like elite club for reliable income stocks. Holdings include Microsoft, Apple, Johnson & Johnson. This is great for young investors who want to see their dividends growing over time. And the last on the list is number 3, VYM, Vanguard High Yield Dividend ETF with the yield of 3%. VYM cast a wider net. It focuses on the company with above average yields, but without chasing the risky ones. With this ETF, you get exposure to banks, telecom, energy, and much more. This is for the people who want to diversify across different industries and have a reliable income coming from dividends. So whether you are going to handpick stocks like Coca-Cola or Microsoft or building a basket with SCHD, the key is start now, stay consistent, and reinvest those dividends back into the stock, and your portfolio will grow over time. That's how Warren Buffett turned his pocket money into a dynasty. So the millionaire equation is very simple: growth plus dividends. You can chase hype or you can build wealth over time, slowly but surely. The choice is yours. Buffett chose the slow lane and he became a billionaire. It's up to you that what you want to choose. So this is what true wealth looks like: compounding, reinvesting, sleeping peacefully while your money works for you. Dividend investing is slow but powerful. Start with $25, grow it to $100 per month and beyond. And in that way, you will build wealth over time. So in summary, we discussed about dividend stocks, which dividend stocks makes more sense for you to invest in, how you can plan and strategize and can grow your dividend portfolio. With that, I conclude this video. I really wish you become very successful in investing in dividends and making money through dividends while you sleep. The only thing I can ask you is to hit the like button and subscribe to this channel. It means the world to me. And see you in the next video. Thank you so much.
I don't ever slow up, no I don't take shit, I got no love